Hi guys, I'm Manu and welcome to another episode of Sweet Money. As for myself, I'm a CPA from Canada and the US, and I own a cool little accounting firm. Before I jump into today's topic, I want to take 30 seconds and quickly address JT's resignation. This resignation just happened a couple of hours ago. It's fresh. I really haven't had time to fully digest what's happened. But here's a quick few tidbits, and then I guess I'll get on to the topic du jour. Number one, as soon as he made the announcement, the dollar went up almost an entire penny. Number two, as soon as he made the announcement, the stock market went up. Number three, it is sunny and the weather is just gorgeous outside. The sky is blue. It has not been this sunny or this bright for the past 2 weeks. So even the gods are smiling. It was very poetic. I quickly saw the press conference, and as the journalists were waiting for JT to show up, his papers on the podium started flying away. Usually, out of courtesy, when that happens, the security guards or the staff members or someone jumps up, grabs the papers, puts them up on the podium, and they put a weight on top of the papers so that they don't fly away. That did not happen. No one moved from their seat. And when a leader's papers are flying in every direction and no one moves to pick them up, that says a lot. Let's get on to today's topic. Canada has gone through some interesting changes, and unfortunately, taxes are no different. Every year, the government invents new things to make it appear as if they're working really hard, and really it adds no value, but the only upside is that it keeps guys like me in business. Let's jump on to the new tax rules for 2025 by getting the basics out of the way first. If you own a corporation and it's sat idle with no activity, you are still required to file a nil return. If you are over the age of 18, you had no income in 2024, you are still legally obligated to file an individual tax return. Most income tax and benefit amounts are indexed to the inflation. The CRA has chosen 2.7%. I personally find it's a little high. The income tax brackets and non-refundable tax credit rates kick in on January 1st, but the child tax benefit kicks in on July 1st to coincide with the date as to when the program was introduced. The 2025 tax brackets for individuals are as follows. Note, I am discussing federal tax rates only because each province has its own set of tax rates. The BPA basic personal amount is $16,129. What that means is if you earn up to that amount, you will not be paying any taxes. The BPA is a non-refundable tax credit of $2,419. What that means is if your income is less than 16 Gs, any unused portion will not be mailed to you as a refund. Fun fact, as soon as you cross the income of $177,882, the BPA starts to diminish. As soon as you cross $253,414, the BPA credit is completely eliminated. Meaning, not only are you in the highest tax bracket, but your marginal tax rate will be higher because you're no longer entitled to the BPA credit. And my boy Jag, with a straight face, says the rich don't pay any taxes. And to all my wealthy peeps watching this video, there is no loophole for this one. The CPP contribution remains at 5.95%, just like 2024, but the percentage now applies to $71,300. The basic exemption is $3,500. The maximum CPP contribution for an employee is $4,034.10. And if you are an employer paying yourself, it is $8,068.20. Now, for those earning between $71,300 and $81,200, anyone in that range will be assessed an additional 4% CPP amount for a total, or a maximum, I should say, of $396. And if you're an employer, that $396 doubles to $792. Employment insurance has also increased for a rate of 1.64% up to a maximum of $1,077.48 on gross income of $65,700. The TFSA remains at $7,000 because of some silly calculation which makes no sense to me. I've said this in a previous video. I'll say it again. If the government truly cared about us, the TFSA would have been significantly higher than the measly $7,000 allotted to us. Moving on, you can contribute to your RRSP up to 18% of your gross income, which caps off at $32,490. Note, if you have unused RRSP room, use it. Use it strategically and weaponize it to your advantage. To all my employees out there, the RRSP is quite frankly the only tool at your disposal to make a significant dent to your tax liability. Therefore, make sure you use it effectively. And look, since I'm passing on such sweet knowledge, do me a favor. Give me some SLC. Subscribe, like, and comment. And quite frankly, I'm not going to lie to you. When I see the likes and comments coming in, it feels good. Because I like you guys so much, here's some tips and tricks for you. When you start out your career at your junior salary, do not put your savings in an RRSP. Yes, you heard me right. This is what you do. You take your savings, you put them in a TFSA. Any excess savings, you invest that in a business. Then, as your junior salary starts to increase and you go into a higher tax bracket, at that point in time, you will then take the money from your TFSA and transfer it to your RRSP. What that does is that it will drop you from the higher tax bracket to a lower tax bracket. But you always want to be careful that you don't trigger any AMT. That is alternative minimum tax. Therefore, strategizing this is extremely important. And if you don't know how this works, speak to your accountant. For all my retirees out there, your OAS, old age security, starts to diminish as soon as you hit a gross income of $93,454. And when you hit the gross income level of $152,459, your OAS completely disappears. And if you have received any OAS, the CRA will claw it back from you. And by the way, this is based on your individual income and not your household income. Therefore, if you are married or in a common law relationship, it is beneficial to split your income strategically so that you can maximize the OAS. I want to briefly add my 2 cents on the OAS program. This is my opinion, my observation. There's no credible backing. If you disagree with what I say, I would love to know in the comments section. Our largest vote bank in Canada are the baby boomers, and the baby boomers are right now taking full advantage of these OAS program. Okay, they're getting their checks every month. As soon as the baby boomers start to fall off, I believe the OAS program will come to an end. Why? Great question. These programs are no longer sustainable. Canada ran a $60 billion deficit in 2024. Okay. In order to make up for this deficit that's been accumulating, has now gone into the trillions, you have to start cutting back. The lowest hanging fruit that we have that I see right now is the OAS. You get rid of the OAS, you've put back billions of dollars back into the coffer. Right? These programs just aren't sustainable anymore. And quite frankly, you and I have not put any money into the OAS system. Therefore, my suggestion to those who are below the baby boomer generation is plan your retirement as if you will not be receiving an OAS check. And if you do, that's a bonus for you. Spend it wisely. The FHSA, First Home Savings Account, was introduced in 2023. You can put $8,000 every year into this program. The maximum over the years that you can accumulate in this program is $40,000. It works like an RSP. It's a hybrid of RSP and TFSA. When you put the money in the FHSA, you get a tax reduction. It reduces your gross income. Therefore, your tax liability is reduced. And when you pull the money out, there is no tax on the gain, just like the TFSA. Like I said, you could put up to $40,000, and that $40,000 can be put over a period of 15 years. Okay. Now, it's a cute little program, but quite frankly, it only helps a very, very small percentage of the population. Let me explain why. $40,000. Majority of Canadians live in 5 metropolitan cities. You got Vancouver, Calgary, Edmonton, Toronto, Montreal. Okay? The average price of a home in the Greater Toronto Area is $1 million. Vancouver is in the same ballpark. A down payment for $1 million house, if you don't want to pay any extra insurance, is 20%. That's $200,000. $40,000 is nothing. It's literally a drop in the bucket. This program is great if you live in the outskirts in some small rural town where a home will cost you $300,000. Then it's a fantastic program. But for a $1.1 million house, it really doesn't move the needle. And guys, let's be honest. You can't even buy a car for $40,000, let alone a home. Let's quickly delve into corporate tax. Those of you who own a private corporation, a CCPC, Canadian controlled private corporation, the tax rates for 2025 have not gone up. I guess it's good news. It would have been better news had the rates come down, but looking at the way things are, I guess we'll take what we can, right? Because on the personal side, everything has gone up. This tax really irritates me, the carbon tax. And I believe it's one of the primary reasons why we had so much inflation in Canada. But it is what it is. Let's just quickly delve into the carbon rebate for small businesses. Only CCPCs and the Indigenous CCPCs qualify for this rebate. To be eligible for the retroactive payment that covers the 2019, 2020 to 2023, 2024 fuel charge years, you must have met both of the following criteria for the tax year ending in 2023. You were a CCPC at all times. You filed your tax return no later than July 15th, 2024. To receive a rebate amount for a particular fuel charge year, you must have also met both of the following criteria. Employed one or more persons in a designated province in the calendar year in which the fuel charge year begins. Had 499 or fewer employees throughout Canada in that calendar year. Designated provinces and amounts per employee. So very quickly, not designated, meaning these provinces did not have the carbon tax rebate for certain years. And really, it's nothing that exciting. If you look at Ontario, the most populous province per employee, you get $146 in 2023. So if you're a small little business has 10 employees, you get $1,460, right? Which is really nothing. It's a drop in the hat. I want to quickly talk about GAR, the General Anti-Avoidance Rule. This topic doesn't get as much recognition as it should, but from what I'm seeing, the landscape of Canada, we have to talk about this more often, and it's important for Canadians who own businesses to understand this. Basically, what GAR talks about is the person that owns a company will act in an ethical and moral way. They will not deliberately cheat the CRA to avoid paying taxes. Okay? In essence, do not go pretending that you're Robin Hood. For 2025, several rules were introduced, but I want you guys to focus on 3 of them which impact you directly. The penalty for being caught in tax avoidance is 25%. The reassessment period has been extended by additional 3 years, which basically means they can now go as far back as they want and reassess you. Number 3, like I said earlier, based on the landscape, the CRA has a lot of pressure to go out there and catch baddies. You guys have been forewarned. This is not a low blow. Accountants who work on cross-border taxes can validate this. To all my American friends who are opening up businesses in Canada, I want you to listen very carefully. The CRA is much more advanced than the IRS. Okay? In the US, it's a little easier to get away with certain things versus the CRA. And a lot of Americans come with that mindset. So please listen to the advice your Canadian accountant is giving you, because it comes from experience. So keep whatever biases and conditionings that you have accumulated in the US, keep them in the US, because if you try that over here, you will get busted. Therefore, once again, I strongly suggest you follow your accountant's lead and do not impose your beliefs and practices. Any zero-emission vehicle purchased after Jan 1, the amortization value has increased from $59,000 to $61,000. So the moral of the story is, to all my peeps out there, purchase your car in Q1. There's 2 benefits. Benefit number 1, historically, cars are cheaper in Q1 and Q4 due to seasonality. And number 2, if you purchase your car in Q1, you can maximize your capital cost allowance for the year. In 2024, the LCGE, the lifetime capital gain exemption, increased from $1,017,000 to $1.25 million. Well, let's not get too excited. The government also turned around and increased your capital gains tax. Remember, after $250,000, your inclusion rate is now 66% as opposed to 50%. Note, many of these rules still have not passed through the Senate. Okay? The CRA has said, it's on their website, the CRA has said that even though these rules have not passed through the Senate, we will move ahead as if they are now in effect. So accountants will be adhering to these new rules. And as long as I have been an accountant, and someone please correct me if I'm wrong, over the past 20 years, I have never gone into January where the new tax rules weren't even cemented and etched in stone. It has never happened as far as I'm concerned. If it has, I would love to know when and under what scenario. Now, the average Canadian might be thinking, why haven't these rules been passed? It's quite simple. Let me tell you. Number 1, the government has been busy introducing gimmicky programs like the sales tax holiday in order to help you save 28 cents on your potato chips. And number 2, in the months of October, November, December, we had an unstable government where the MPs of the Liberal Party wanted the leader to resign, but the leader kept saying, I'll think about it, I'll think about it, I'll think about it. And then every 2 weeks he'd come back and say, psych, I'm not leaving, right? So there was this game of cat and mouse happening during Q4, which also delayed the entire process. And even the economic report in December was delayed. It was just a comedy show that was going on. Really, there's no logical explanation. It was just one big comedy show. It was incompetence. It was inefficiency. It was a wastage of resources. And it was everyone trying to save their job. And a guy like Jag, he was busy trying to ensure he got his pension. That's really all it was, right? Because the PC kept saying, hey, why don't we call an election? And Jag kept supporting JT, so they couldn't call an election. And now here we are in this mess. So my friends, if you think getting the best angle for your Christmas pictures was challenging, you have no idea what we're going through. And remember, it all starts with a simple conversation.